Welcome, everybody. It's a pleasure to be here. My name is Sebastien Dessimoz, and I'm going to talk about tokenized assets, and especially about the different catalysts we see regarding private capital markets and the different opportunities that are opened with those kind of technologies. So when we talk about digital assets, banks, sophisticated investors, and the full ecosystem is typically seeing three main kind of opportunities. The first one is obviously cryptocurrencies, which is well known. The second one is tokenized assets. And the last one, which is also gaining a lot of traction, is digital currencies. Today, I'm going to focus more specifically on tokenized assets to see if what has been promised over the last few years can be today achieved. Indeed, when we look at the numbers, there are high expectations regarding tokenized assets, especially in the field of private capital markets. If most of the players are aiming to capture this opportunity, this is also because it's potentially a huge opportunity that can be captured. For example, the World Economic Forum is saying that there is today $1 trillion invested into tokenized assets, and they expect that the market will be close to 24 trillion in 2025-2027. So i.e. a 90% compounded annual growth rates. So today, we are going to focus on this market and see if that's an opportunity that can be really captured, taking into account the current state of technology and legal and regulatory frameworks. So the first point to understand is that when we are talking about tokenized assets and tokenized securities, the sweet spot is clearly not on listed capital markets, but on private capital markets. That was a misunderstanding a couple of years ago when people were thinking that blockchain and distributed ledger technology would replace the way traditional listed capital markets would work, and we would basically get rid of central security depository. At the opposite, today, the full industry agrees that the technology will not be applied on listed capital market, but rather on the private capital market side. And this is something that is gaining a lot of attraction and interest simply because the market is huge. As of today, the overall global markets of private assets is close to a little bit less than $300 trillion, which is much bigger and larger than classical listed capital markets. So even if some players attempt to capture only a small piece of this market, it's still potentially huge growth premium that could be captured. And obviously, when we look at it, we can observe that the biggest chunk is real estate, hence the strong interest from real estate players to enter into the field, and followed by private equity, private debt, and collectibles. If we look on the right-hand side of the slide, what is, I think, very important with this opportunity is that we are talking about democratization. If you look, for example, at the Swiss market, there are close to 240 companies that are listed on the stock exchange, and all the other companies do not have access to public capital markets. But still, in Switzerland, it is estimated that there are around 5,000 companies that are considered as high growth, and that could potentially need to access more efficient and more democratized capital markets to finance themselves. And inversely, investors are also interested to enter into the field. If you look at Europe, the order of magnitude is exactly the same. There is approximately a factor of 20, so meaning that there are 20 more. If you multiply by 20 the number of listed companies, you will know approximately what is the number of high growth companies in Europe. Here, that's why we are focusing on these specific market segments. The second reason, which is very interesting, is that if you look at public markets versus private markets, you will see that, in fact, the primary capital raised in private capital markets is 2 times larger than what is raised via public capital markets. And interestingly, if you look at liquidity, secondary market, here we are saying that the private capital market is 330 times less liquid than the public capital market. So here the objective is to bring the private capital market more efficient, more transparent, cheaper, and also potentially more liquid. Of course, it is never gonna reach the same level of liquidity as public capital markets, but still there is a strong need for liquidity events, and here the tokenized assets could potentially play a role to fuel those kind of markets. What is very interesting today is that in order to digitalize private capital markets, we have a couple of both technological and regulatory enablers, especially in Switzerland and in some selected jurisdictions. Of course, we have first the distributed ledger technology and the smart contracts in particular, such as Ethereum, but they have been existing and they are well known by most of the people here since 2015. What is more interesting is that now you have also standards that have been published. For example, in Switzerland, there is the Capital Market and Technology Association, which has developed and published standards to do tokenization. And they started first for the tokenization of Swiss corporations. So they have a standard, they have sample smart contracts available that have been audited from a security standpoint. And of course, they also have standard prospectus that are fully in compliance with the Swiss law. A next interesting regulatory catalyst has been the approval by the Swiss Parliament in September 2020 of the so-called DLT law. And this one, as we'll see it later, is also a very strong catalyst, especially since the entry into force of some adjustments in February of this year. And here again, this is an important achievement that is opening the door to a brand new world. And of course, what you also need to take into consideration is that electronic signature is potentially a strong catalyst in the field of private capital markets. GDPR, cloud provider services, and other catalysts are also driving this search for the digitalization of private capital markets. The most important point to take into consideration as of today is that the new law, the so-called Lex DLT, has introduced a new kind of securities in the law. So in Switzerland, up to 1st of February of this year, you had basically two main ways to have, I would say, close to electronic securities. You had simple uncertificated securities, which is the classical way to represent a security according to the Swiss Code of Obligation. And you have the transferable securities that are booked on the banking network, where you register the main securities in the so-called Central Security Depository, CSD, as it is written here. And what is very interesting is that in order to make securities transferable, we imagine this new law called intermediate securities, where banks, basically each of the bank is keeping a general ledger, which is electronic. And as soon as somebody is entering an entry into the ledger of a bank, the securities is considered as being transferred. We had an issue for private capital markets because there are only two ways to formally transfer a security, which is either you have a written agreement, which is what somebody would call a share purchase agreement, which is highly manual, or you would need what they call electronic qualified signature. And this is still not very much accepted a lot in Switzerland, even if, of course, it's totally legal. So what was interesting is that if you take a security and this security is not properly registered within a banking network and a CSD, it was still hardly difficult to transfer this security in a very fast and efficient manner. The new Swiss DLT law is introducing a new kind of uncertificated securities called registered securities. And what is very interesting is that in this way, first, we recognize that a security can be booked on a distributed ledger, such as a blockchain, and then it opens the possibility to transfer this security in a fully electronic manner, without any human intervention, and without the requirements to have a written paper that is signed, or without using absolutely a bank. And that's exactly what was missing to this world, is that if you want to bring a security transferable, you need to make sure to have in place those kind of law adjustments. So we see now that the technology is in place, the law is in place. So do we have all the necessary ingredients to make a success of tokenized assets and tokenized securities, especially when looking at the ecosystem? On this chart, you see that beside the regulation, beside the technology, we also have most of the players, for example, in Switzerland, who are already equipped with the right tools and infrastructure, and who already did some tests, even some real case examples to do private capital market transactions. There were some transactions done on the private capital market side, primary market, and even what was missing as of today, that's the possibility to have a secondary market. So that's what we would call a regulated digital asset marketplace. And this is the key missing piece of the ecosystem. Because if you digitalize a security, and this security is in the form of a tokenized asset or tokenized securities, what you want is not to digitalize it per se. What you want is to digitalize it to make it much more transferable, increase price formation mechanism, increase liquidity and transparency, both for the issuers and for the investors. Up to now, we were missing this piece of the ecosystem. What is very interesting, and everybody knows that, is that here we are talking about a very special kind of animals. Because up to now, you had either classical stock markets, which are highly regulated, which gives you a high level of comfort and investor protection, and who can also accept for trading classical securities. And on the other side, you had crypto exchange, which are lowly regulated, typically regulated only as under the AML law. They can accept cryptocurrencies as trading, but due to their regulatory status, they are not authorized to support the trading of classical securities nor tokenized securities. And what was very interesting is the new kind of marketplace that is missing is something in between. That's a marketplace that is highly regulated, and due to its regulation, it can accept the trading and exchange of securities, tokenized securities, private capital markets, even potentially public capital markets, although it's not the most interesting point if you look at the demand. And the second point is that you want, with the same kind of marketplace, you want to keep all the advantages of the crypto exchange, of the crypto world. You want the technology to be fast, efficient, cheap, and of course, if you have all those ingredients together, you will have the famous digital asset exchange that are missing to the ecosystem. The good news is that today is that we also have those kind of marketplace now existing in Switzerland. And I have the pleasure to announce you that at Taurus, we have launched the first independent, regulated, and Swiss digital asset marketplace that can admit for trading not only cryptocurrencies, but also any types of tokenized securities and tokenized assets. This marketplace is called Taurus Digital Exchange, TDX. The main advantage is that it's a fully electronic platform. You can access it online. It's available. There is an electronic onboarding, electronic trading available, and the possibility to admit for trading all kinds of different tokenized securities according to various liquidity schedules. Even more, this marketplace is, of course, regulated. It's incorporated here. Taurus is incorporated in Switzerland, hence we are subject to the supervision and monitoring of the Swiss financial market regulator, the FINMA. What is special about TDX? What is the width of the different features offered by such a platform? First, we can support many different types of assets admitted for trading on such a platform. We are talking here about tokenized real estate, tokenized private equity, tokenized private debt, tokenized structured products, cryptocurrencies, digital currencies such as GEM, for example, or even art, collectibles, and non-fungible tokens. So the good news is that up to now, most of the people were trying to structure deals where they had tokens, and they were trying to avoid to structure it in a way where it's not classified as a securities at all. That was what people were trying to do. What is very special about a platform such as TDX is that you as an issuer, you as a product manufacturer, you can really think about what is the best product for the investors, what is the best product for the issuers. And whatever the form, we can still admit it for trading and bring the necessary investor protection, both to the issuers and to the classical investors. So it's not also about tokenized assets. The second very important point regarding TDX is that, of course, we truly believe that the value of the distributed ledger world is to leverage large public mainnet. So, because if you book tokenized securities on large public mainnet, by definition, they could be in the future available for trading on other trading venues, be it in Switzerland or in any other countries. It's like you are booking the security on a global CSD, and that's the value of leveraging the Internet of Value, as some people calls distributed ledger technology. As of today, we support many different kind of public blockchain network supporting smart contracts. Of course, we started with Ethereum, and we support any types of ERC20 tokens, including standards such as the CMTA standards. And we have also the possibility now to book any types of tokenized securities on the Tezos network, which is also a network that is gaining attraction and momentum due to its proof of stake, low consumption characteristics. The third important point to keep in mind about our marketplace is that by definition, we are focused on private capital markets. And private capital markets, in some case, may be illiquid or low liquidity, or may demonstrate low liquidity by definition. And liquidity will not pop up instantly simply because a token or tokenized security is available for trading on a marketplace. In order to cope with those specific requirements, we have the possibility to implement very innovative liquidity schemes and market schedules. Of course, we can implement continuous limit order books, but we have also the possibility to implement auctions, for example. It can be monthly liquidity events, quarterly liquidity events, or even annual liquidity events. And that's something that is very important for us to make sure that we offer attractive liquidity events both to issuers and investors. In terms of user, the aim of our platform is first to cover and to connect with banks and financial institutions. We have already onboarded a couple of them, and it gives them the possibility to offer to their own clients the possibility to trade tokenized securities using an independent marketplace. Of course, issuers can also access our marketplace, and in some very selective case, it's also possible for professional/qualified investors to onboard on TDX to trade directly on the platform. So, but if there is today such a platform, and it has been existing for a couple of weeks, so what would be the interest, for example, for banks to connect? What would be the interest for issuers or even investors? So first, when we look at banks, the most important point is that banks can structure many different types of transactions in private capital markets. And the TDX platform is basically a way for them to provide a safe and regulated access to digital assets to their clients. Then it's also the possibility for them to generate new revenue streams, to leverage their distribution channels with new and differentiating products, and potentially to offer access to new investment opportunities in the private capital market sides, which is something that is attracting for most of their clients. For the issuers, issuers are looking here to better finance themselves. And in some cases, they would like to unlock liquidity for some existing investors, shareholders, even employees or owners. And that's an efficient way to basically access to multilateral trading and to get better price transparency about the opportunities to exit or to buy or sell securities. The second point, it's about also gaining visibility and raising potentially in the future capital much more efficiently, and to also give a democratized access to capital markets to those kind of issuers who up to now had not the possibility to access traditional capital markets. And finally, the last point is also the possibility to digitalize the full securities processing value chain, including, for example, proxy voting or any different kinds of corporate actions, because as soon as the securities is digitalized, you have the possibility to be much more efficient in the way you interact with your shareholders and investors. Finally, but not least, of course, if you have a marketplace, you have issuers, you have banks, you also need to have investors and investors. And here the value added is basically to access new investment opportunities in the field of private capital markets, alternative assets, even NFTs as of today is gaining a lot of traction and momentum. And all those kind of securities can be today traded on such a marketplace. So what do you need if you want to start using such a platform? So as a bank, of course, you need to onboard. What is interesting for a bank is that TDX is also fully equipped to support classical connectivity using FIX, the FIX protocol, which is today used by most of the trading desk and most of the financial players to access to traditional trading venues. And banks can play several roles. They can basically be an issuer themselves. They can support an issuer to make a transaction. They can act as market maker or even buy, sell on behalf of their own clients and give access to those brand new world to their own clients. If you're an issuer and potentially you would be interested to admit for trading those tokenized securities, if you're a pure corporate issuer, if you are not an asset-backed vehicle, you will need first to have minimum 2 years in operations, 2 full years. And we are asking today for a minimum turnover of 5 million Swiss francs before to consider the admission for trading on our marketplace. Of course, you also need to provide some audited financial statements in order for us to assess if we could consider or not admitted it for you for trading. And finally, but not least, you need to have tokenized and issued the shares on a blockchain, a DLT network, and using a standard that is recognized by Taurus, such as, for example, the CMTA standards that we fully support, and that is also bringing soon a quality label that is important for a marketplace like ours, and especially for the investors. And finally, the investors, if you want to access the platform in direct, you need to be professional or qualified investors. And if you match those criteria, we can onboard you fully electronic in a couple of minutes. We just need an ID, of course, a proof of address, and we'll do all necessary check according to the Swiss law to onboard you. And an investor, the onboarding is free. And of course, you only pay fees if you trade. If you don't trade, by definition, you are not going to pay trading fees on the platform. So the good news in summary is that I think we are today, it's in a very exciting moment in the world of tokenized assets, because most of the elements that were missing still a couple of years ago, that were highly promising to access private capital markets, are all present here today, especially in Switzerland. The good news is that beside the new DLT law that was enacted February of this year, we are also now the first tokenized securities marketplace that are also available. So now it's basically a question of starting to have the first transactions with some leading players, leading issuers. And as you will see, the next panel meetings will basically have such people exchanging about the different possibilities. And so we are very much optimistic about the future of these markets. And the Swiss market is also considered today as one of the reference markets in this field. And if you want more information, you can still connect to tdx.com. And in summary, I would like to thank you very much for your attention. And now I hand it over to Victor for the next part of the presentation. Thank you.